Hey guys, welcome to our weekly live stream with our trader Jay. I don't know where you guys are located, so good morning, good afternoon, and good evening. And you can comment in the chat box and tell me where you are. Welcome, all of you. And I hope you all had a wonderful weekend, as I am, because I went to see the cherry blossom and the weather is getting warmer, and I'm so excited. Um, Back to the topic, a lot of people ask about the indicators we look at to get some sense of the market and helps making trading decisions in our last live stream. So this week we're going to talk about those, and Jay will introduce the main 5 indicators we look at and tell you guys how to set it up on the chart. We will use it we will do it on TradingView, but you can use all kinds of platform that has the service, and we're just taking an example. So without further ado, let's welcome Jay.
Hey, thank you, Sia. Hey, everybody. How are you guys all doing? We're having a nice, great day over here in New Jersey. Weather's finally getting warm. I'm super excited. Hope everyone is doing well. Yeah, like Sia said, good morning, good afternoon, or good night, wherever you guys are. Global is worldwide, and so are we. And I hope you guys are excited to learn something today. We're going to be going over the 5 most important indicators that we look at. But before we start, let's if you guys could put it in the chat if you guys are like experienced with indicators or you guys more beginner. So I just want to kind of like understand what kind of level you guys are at right now. Today we're gonna go over some, I guess, more beginner and basic stuff, but then towards the end a little bit more advanced. So there's a little bit of everything for everybody. Just stick around and maybe you guys will pick something up that you guys don't even know, right? Because we are always learning in the market, and I as well. We will never stop learning, right? If you stop learning, then you're gonna fall behind. So just be humble. There's always something for somebody to learn. All right, let's see. I guess I have to go look at the chat on YouTube, huh? All right, let me look at the chat on YouTube. Beginner, trader, signaler, beginner. Okay. All right, great. So beginners are good because we do have some like very basic stuff as well as advanced stuff. But glad you guys are here. You guys are gonna learn something today, and we're gonna help you implement this in your trading. So so the market isn't as confusing, and you guys aren't just losing money and not knowing what to do. The most important thing to remember is indicators do not make you money. Indicators are just are derived from price or time and volume. So those are the only 3 things. The market is made up of price, volume, and time, and that's it. That's what makes up a chart, and that encapsulates everything. All of the price all of the news, all of the psychology, all of the participants in a market is all encapsulated in those 3 things. So you just have to remember and be aware of those 3 things. But before we start, indicators, they're great. They use mathematical formulas to derive certain insights based off of those 3 things I just talked about. But most of the time, one indicator is not enough, and you can't base a whole trading system off of just indicators, right? It's more of a tool for you to judge, is this a good place to enter? And also just have a system of rules and checks in place for you to better systematically look at how you're trading. But price is ultimately the only thing that matters. If an indicator is telling you to get in, but price is going the opposite direction, you do not get in that trade, because that's how you end up losing money, right? So a quick aside before we start. Let's see. All right, let me share my screen. All right, can you see my screen? Sia, can you see my screen? I think you guys
Yes, definitely.
can. Okay. All right, cool. So, welcome to Finex Education, and we're going to be teaching you guys the top 5 indicators for trading today. So, quick agenda. The first thing we're going to go over is the different types of indicators, very beginner. Then we're going to go into the top 5 indicators that I am using and different strategies we can kind of like use around them. And then number 3, we're going to go into how to use some of the indicators to trade, and I'll probably place the trade live if there's something good. And then 4, just a quick Q&A for you guys. Whatever questions you guys have, we will do our best to answer them. And that's it. So let's get started. So types of indicators. So basically there are, I guess, 5 types of indicators. Technical indicator basics, that's not an indicator, that's just technical indicator basics. So basically the 5 types are trend indicators, momentum indicators, volume indicators, volatility indicators, and support and resistance indicators. So trend indicators are basically like moving averages at the MACD or the exponential moving averages. So you can determine the trend of a crypto or an asset by smoothing the price over the past whatever period you're looking at. So like either the 200-day, the 50-day, the 13-day. It's basically an average of the previous price, right? So that's why it's a trend, because price can go up and down each single day. It could be very volatile. But once you smooth it out and take the average of, let's say, the previous 200 days, and if that line is curving up, then that's determining we're in an uptrend. So the trend indicators are the most basic. And then momentum indicators, such as the stochastic oscillator or the relative strength index, which are the most 2 popular ones. So momentum indicators just determine if the momentum is up or down, right? So basically for the RSI, in a previous number of days, right, if the more days are up and the bigger percentage gain, then we have more momentum to the upside. So this one is a good indicator for when trading inside of range, catching bottoms and catching tops. And then we have the volume indicators, right? Volume is one of the big 3 that we just talked about. Volume indicators will show you how much volume is transacted at each price. We'll go into one of my favorite indicators, the visible range volume profile. Someone asked about that in the last live stream. And that one is a very good one to have in your arsenal of trading tools. And then next up is volatility indicators. So volatility indicators, I use them, but not as much, but we're going to go over 2 today, the average true range and the TTM squeeze. So volatility indicators just takes into consideration how big of a move will a crypto asset stock will move within like, let's say the previous 14 or 30 days. And then it takes that average and determine, okay, we have a chance of moving, let's say $1,000 today for Bitcoin, right? So that's basically the volatility indicator. And then the next one we're not really going to go over is just support and resistance indicator, like the Fibonacci. We're not really going to go into that one. All right, so let's get started. Let me see you guys type in the chat. Which indicator do you guys used, or which one are you guys most excited to learn about? So I just get a kind of poll to see what you guys are into. Hey Alex, what's up? I see you guys in the chat. All right, let's see. Let's move into the indicator. All right, so let's get into it. So we're going to start off with very basics. You know, if you guys seen this already, you know, moving average, the very basic, very first indicator people should learn. We're going to go over this one relatively quickly, but if you guys know it already, it's always good to have a refresher. So the simple moving average, right? It just takes, like I said before, it just takes the average price over a certain amount of days and then averages those prices to make basically a line on your chart, right? So one of the most popular ones is like the 200-day moving average. That's the one everybody talks about in the media, for stocks, for everything. That is a long-term trend indicator. So if the 200-day indicator is pointing up, is sloping up, that means we're in an uptrend. If it's flat, that means we're in a neutral trading range kind of trading environment right now. And if it's sloping down, then we're in a bearish trend. So it basically, some trading signals that can be had with a simple moving average is if for example, if one quicker moving average, such as the 50-day, because it only takes the price of the previous 50 days. So that one's more volatile. It can go up and down way more quickly than the 200. So one popular one is when the 50-day moving average crosses above the 200-day. Everyone in the financial world talks about this. It's just called the golden cross. That's like the end all be all. And if it's on the way down, it's called a death cross, right? Scary names. So basically, it's just saying once the 50-day moving average is above the 200-day moving average, that means momentum and the trend is to the upside. Because a shorter time frame, we were under the 200-day, which means the average price over the 50 days was lower than the 200-day, right? But now it's above it. Then now the average price over the 50 is above the 200, which means the momentum is shifting to the upside, and then the trend is up. So people have different entry signals based off of things like that. And let's just look at this chart. And of course, if you guys were here for the previous live stream, we talked about how prices would retrace to the 200 moving average. You guys can see over here. We were talking about it when Bitcoin was at 24,000, but with the failed breakout right over here, I don't know if you guys can see that, but basically on the chart, the last at 25,000, we said because we failed the breakout, the most likely place prices are attracted to is the 200-day moving average next. And of course, we came down to the 200-day, which was at 20,000, and bounced straight off. We had a 38% gain after we came back, retested the support of the 200-day moving average, and bounced off like a rocket. So obviously, this indicator is very popular, and the more popular the indicator is, more people are attracted to it. More people will. It's basically like a reinforcement, right? The more people who use it, the more people it works. So it's kind of like crowd psychology. So if we look at this, so the pink line is the 200-day moving average, right? And basically from 2021 to 2022, we were kind of in a flat trend because you can see it is a little bit sloping up, but prices were basically topping out. It went from 60K to 30K to 60K. Of course, within that quick kind of up and down, there are mini trends. So for example, the orange line is a 50-day moving average, and that one will determine the trend of the short term, right? So as you can see, the prices are following the 50-day down and the 50-day up, right? But the 200-day moving average is flat. So that means overall we're in a flat trend. But of course, on the shorter time frames, we can have different trades and different opportunities because it is a quicker trade. So for example, one simple one, I'm not saying trade off this. If prices are over the 50-day moving average, you can go long. So for example, right over here, when prices bottom out at 30,000 and it reclaimed, right? We reclaimed the 50-day moving average. As you can see, if you entered here, this would have been a nice trade all the way up to 52K. That's almost almost a 100% gain on just this trade, just a simple 50-day moving average, right? But that is very risky because there could be whipsaw signals. Like for example, over here, we went down, we broke the 50-day, we went up. But of course, this one kind of like worked out as well. If you entered at 48K, when it broke over the 50, you could have reached all the way to 68,000. So this is super simple. Anybody can do this. Anyone can see this. Just add it, 50-day moving average on your trading view, right? And of course, this is the one we're kind of talking about. The 200-day is the most important one. As you can see, basically from 2022 of May to 2023, end of 2023, we've been in a downtrend by this, as you can see, by the slope of the moving average. And you can see this is a very deep, like 45-degree downward slope. So when prices tested the 200-day moving average, it acts as resistance. So when prices are under the moving average, it acts as resistance. When prices are above it, like over here in this case, it acts as support. So this is more, I guess, advanced if you're more risky. So if you tested the 200-day and you see the 50-day is under the 200-day, then this is a bear. Where in a short-term bearish, long-term neutral trend, you can try to short right here, right? Take a short position and just risk. If prices reclaim the 200-day, then just get out of the trade. And of course, you saw it if you can see on this chart. If you shorted at this 50K 200-day moving average, you would have caught this whole trend and gotten out when prices reclaimed the 200, which is around 20,000. So you would have made like $30,000 on one Bitcoin. Right. So as you can see now, we also talked about this in the last live stream. We're in a neutral trend now, and it's sloping up. So now we're not in this crazy bear market when prices are just coming down, as in 2022. Now we're moving back into a neutral trend, as you can see from the flattening out of the 200-day. So now I wouldn't be taking any shorts. If anything, I would be buying bounces off the 50 and off the 200-day moving average. Greetings. Cool. All right, so the next one, I'm not counting this one as a separate one. So this is all the first indicator. It's the exponential moving average. So all this one does is that it weighs the recent price more than the previous price. So the exponential just means it weighs the recent one, right? It gives it a higher weight than the older price. So this one's more of a faster moving average than the SMA. So I like to use this one for my short-term trades. So this is the same idea. When the EMA is sloping up, then we're in an uptrend. If EMA is sloping down, we're in a downtrend, right? And it also acts as short-term support and resistance. What I like to do is for the 9-day EMA. So for the EMAs, I recommend using the 9-day and the 21-day. It just comes from experience, stock trading, whatever. I've been using it for a long time, and it works out pretty well. Just like for the simple moving average, you want to use the 200-day and the 50-day. So the blue line on this chart is the 9-day moving average. The red line is a 21. So as you can see, when we're on like an uptrend, bullish trend, pullbacks to the 9. If it's a very strong bull trend, then pullbacks to the 9-day exponential moving average is a good chance for you to buy, to get in on this trend, for you to dip buy, right? As you can see, prices went up, consolidated, hit the 9 EMA. Oops, didn't mean to do that. Hit the 9 EMA, went up again, and then consolidated again. And the same thing over here. We had a bull trend up, consolidated, came near the 9 EMA, continued its trend, right? So let me share with you guys. And then, actually, let me show you graphically first. One strategy I used to use a lot is when the 9 exponential moving averages cross over the 21. So I would use that as a buy alert. So for example, right here, when the 9 EMA broke over the 21 EMA, which is the red line. So the blue is over the red. If you guys can see it right here, this would give me a entry alert, right? Because that is my strategy. So when I enter here, I wouldn't sell until the 9 crosses back under the 21. So I would be in at 17,000, and I would have been holding all the way until 22,000, right? So that is a pretty good trade. It basically captured this whole bull move, whole first initial bullish move. And then again, when it crossed over right here, I would have entered at 22K, 23K, and then I would still be in this trade at 28K. So the 2 simple strategies you guys can use to determine a quick trend. So for the exponential moving average, this is more for medium-term trading, right? Because it is quicker, like we talked about, versus the simple moving average. So this is for short-term swing trades, 1 month to 3 months. All right, let me share my screen, other screen. Let's see. I guess I'll share my whole window, actually. All right, whatever. Here. So I back tested this strategy. Maybe this is going too much into it, but I have back testing results from this EMA strategy also. So this is the strategy coded on TradingView. And if you go to strategy tester, So these are the basic. So these are the back tested results I have. So this goes back to, let's see. So this starting from 2019 to 2000, basically to today, right? So if you started off with, let's see, $1,000, and I'm just trading one contract of Bitcoin with 0.1 commission, right? So with $1,000 over the period of 3 years, you would have made almost 50,000 in profits. So that's a 4,474% return. That's pretty good. And I only had a win rate of 35%. So most of my trades were losers because as you can see from, guys, you can't see it that much. Like over here, right? There's a lot of whipsaw movement. So I would buy, I would sell, but I would take a small loss. Like over here, I would buy, I would sell, I would buy, I would sell, I would buy, I would sell. So that means I took many small paper cut losses. But once I captured a big trend, I made all of those back. And of course, you can see it through the backtesting results, 35% profitable. So that means out of 100 trades, I only got 35. I lost 65 trades. However, I still made a 4,500% return. So obviously, strategy works, but this is only the past 3-year backtesting. If you extend it, it still works. It still makes a profit. But hodling Bitcoin would have made you more. Obviously, if you hodl Bitcoin from $1 to like 60,000, that's way better than trading it actively. So just wanted to show you guys some results, some backtested results to show you this strategy actually does work. I'm not saying go take it and trade it because there are nuances, like you don't want to get chopped, but it is a very solid and simple strategy.
Okay, sorry to interrupt, Jay. There's one question on the EMA. He said, Amir said, does this only work on daily time frame?
No, it works on a lot of time frames, but I like it on the daily. It works on like when I used to day trade stocks, I would use the strategy on the 5-minute also. But I found that, but you would just have to kind of like test it on TradingView or test it with whatever software you have. I liked it on the 5-minute for stock trading. I haven't really used it that much for crypto day trading because I mostly do long-term trades now. So it works on different time frames. You just got to try it out. I used the 4-hour, the 5-minute, and the daily, but I like it on the daily the most. All right, back to the presentation. Yeah, I hope you guys like that one. That's one that I really like to use back in the day. I mean, I still use it now. It's a really great trend following indicator, right? Because like, sure, you get chopped out a little bit when it consolidates, but I mean, Bitcoin, when it moves big, right? 50%, 60% moves. So once you capture that, once you get in at a good price, you're getting in early. You're getting in way early. This is almost bottom, right? So after you get in here, you're just capturing this whole trend. So it's definitely a great tool for you to check out. So the next indicator we guys are looking at is the RSI. Everybody talks about this one, you know, very, very popular. Everybody knows about it. You can find it on any trading platform. It's always free. So this is a momentum-based oscillator, right? So what this one does is it goes between 0 and 100. So it takes the previous day prices, but puts more emphasis on the recent day. And then it just kind of averages to see how many days are up days and what percentage of days, how many percentage points it gained on those trading days. And then through that, it gives you a number from 0 to 100 to show you the momentum, how the momentum has been for the past 14 days. So this one mostly works in a range, or it works for you to pick the tops and the bottoms, because if a stock is overbought or oversold, it can continue. If it's trending down, the RSI will continue hitting overbought, oversold, my bad. So under 30 is oversold, above 70 is overbought. So the RSI could continue to be oversold for a long period of time. It could just continue to hit 50, 30, 50, 30, right? That's not much of a trading signal. So the way I really like to use the RSI is to actually look for divergence. So I'm going to give you guys a strategy with the RSI. So this is just to show you under 30 is oversold, under 30 is oversold, right? Simple RSI on TradingView. And this does work, but you have to kind of use it in in correlation, in correspondence with like different indicators, right? So for example, you see a support at 16,000 or 15,500, and then you see RSI is under 30. You're like, okay, this is a great place to buy. So this just gives you confirmation that it's oversold and it's oversold into support. So you have to like add in price action, support, and resistance with indicators. So for example, this would be a good place to get in, right? Because it's into support and it's also under 30. And over here, especially, this is, it's not on the chart right now, but this is the 200-day moving average, like we talked about in the last live stream. So prices came into the 200-day moving average and it became oversold. So this is a perfect entry. So what you want to do is look for confluences in different indicators. So the 200-day is showing you its support. The RSI is showing you it's oversold. So that's two indicators in confluence with each other, right? So then you know this has a high probability of making money from that if you entered over there. So if you're using the RSI alone, what I like to do is look for divergence. So basically, divergence is when the price and the RSI or any other indicator, it does not make a corresponding. So basically, if price makes a new low, the RSI momentum doesn't make a new low. That is a divergence. I'll show you guys on the chart in the next slide. So basically, if you guys can read the slide, a bearish divergence forms when a coin price records a higher high, but the RSI forms a lower high, right? But so basically, like I just said, and then a bullish divergence forms when price makes a lower low, but RSI makes a higher high. And I'll show you guys in the chart so it's more clear. So same chart, same example. After the FTX collapse, prices dumped, right, to 15,500. RSI became oversold right here. If you didn't get in because you guys are scared, no problem. So afterwards, prices bounced, went sideways, came down to make a lower low. So this one, it didn't make a lower low, but it basically tested the previous low. So you can see the price was at a neutral sloping level, right? Oops, didn't mean to press that. But if you guys look at the RSI, it has a positive slope. So prices were making a new low or the same low as previously, but the RSI made a higher high. You guys can see that, right? You guys can see that clearly in the chart. So that is a divergence. So that means prices prices is showing you that it's still bearish, but the RSI is showing you the downside momentum is dissipating, and that means prices should be going up. And of course, from the chart we can see if you entered here on this divergence, you would have captured a small move, right? Sure, it might have only been like 10-20% gains, but this is just another indicator for you to put in your trading arsenal, right? This would have still been a pretty good profit. Any questions on the RSI? Okay, no questions. Cool. Go to the next one. Let me see. Let me find my slides again. So the next indicator that we'll be talking about is average true range. So this one basically takes into consideration, it's a volatility, first of all, it's a volatility-based indicator. And it takes into consideration the previous day's price. So what usually people do is use a 14-day average. So it looks back on the previous 14 days and then calculate the average price movement in that day. And then just gives you a simple like, oh, past 14 days, the average movement was $1,000. So with that, you can basically determine, let's say today we already moved $1,000. The probability of it moving down, let's say it moved down 1,000, right? So the probability of it moving down another 1,000 is very low because the average range in the past 14 days is 1,000. So you can play a reversion trade, which is more advanced. It just basically means on average, we are in a $1,000 trading range. So if it hit the bottom of that $1,000 trading range, the probability is that we will go to the upside, which is a mean reversion trade. And so this one is just a quick one. And we can also use this one for options trading, right? So I guess I'm gonna mention it later when I place an option trade live. So basically, if we hit the $1,000 lower bound of the ATR, then I can basically, I'm saying, hey, the probability of us going lower is very low. So I'm going to sell an option a little bit, or do a buy the dip order, right, on Pinex, and place an order below where we are currently, because the probability likelihood of us going lower is it's not great. It's not in your favor because we already moved down so much. Okay, so this is one of my favorite indicators, and someone asked about this last time, so you guys have to pay attention for this one. So this is the volume profile visible range. So the reason I like this indicator so much is it takes into consideration volume and price. Usually the previous indicators that we looked at most of the time only takes into consideration of price, right? So this one, so let's repeat. Let's see if you guys remember. What makes up a market? It's price, volume, and time. And this indicator takes into consideration price and volume. And that is why this indicator is a beast of an indicator. So basically what the VRVP does, it just graphically shows you the volume traded at each price level. So basically from this, you can determine where the support and resistance are based on the liquidity levels, and it's shown to you on the chart. So if someone trades $1 million of Bitcoin at 28,000, you know that might be a strong resistance, right? Because you can see how much volume is traded. So here is an example of the VRVP. So on the right-hand side, this little sideways mountain looking thing is the VRVP, right? So green represents buying volume, or buying volume was stronger than selling volume. But I don't really consider if it's buying or selling volume. I don't really care about that. To me, this shows me where is the demand, where has volume and price, so where has people came in to the market and said this is a great place to buy, where were people interested in, right? So that is what I'm looking at. So for example, right now, you can see this is a very extended, very high volume area, right, compared to the bottom right here. So this is an area of supply. This is an area where people were interested in Bitcoins. This is a chart of Bitcoin. So let's say if price bounces back, actually it did, right? Price bounced back over here. It hit this area of supply, and then guess what? It came down, right? So you guys really need to take this one and explore it and try it out on your own. So for example, and also what we can see is this is a poor volume area because there's not much volume traded. So on this rally, that means people were chasing, there were no sellers, and prices just went straight through. And especially over here, you guys see how little volume was done over here compared to this area. So this represents a poor volume area. So when price, it moves very quickly, just like on the way up, how prices shot up. This you guys see this one bar right here, prices just shot up. There were no transactions, people just bought it right up, and that's what makes up this poor volume area. And that means this I don't want to put a blanket statement out, but usually when it's a poor volume area, prices will come back and fill that area very quickly. So if prices come under 20, whatever this price is, I can't really see it right now because it's a screenshot. Whatever price this is, it will move basically straight through it. So of course there are caveats to this. If let's say we are in a bull market and people are just buying everything up on every pullback, then it can pull back a little bit and then people will buy it, of course. So it depends on the market dynamic. So like I was saying before, you have to take into consideration the market, the price, and indicators on top of that. So this indicator can also be used to trade options, right? Because for example, let's say this is an area of supply. You can either short here, or let's say you like the Pinex structured products, you could place for this one at least, you could place a covered call. You could gainkeeper right here at 28,000 because prices will test this area and it's most likely to get rejected. And hold on, let me see if I can find a good example right now. And I see a question.
Yeah.
So peaks are resistance and support. Yes, peaks. It does represent resistance and support because it just means there was so much volume traded there, right? So if prices are under, resistance and support. So yeah, if prices, if you can see on this chart, test this area of strong supply, then it's likely to get rejected, right here, because there's people who are underwater right now. People who bought here, they're losing money. So when prices go up back into their entry price, what do they want? They probably want to get out, right? Because prices are bearish right now. So people sell, and then it causes a sell-off. And let me see if I can find something right now. Present. Hold on, actually. Let me log into my profile on my Pinex account. Give me a second. Give me 1 second. So this one is my favorite indicator. It's just because it encapsulates what we're talking about, price and volume. I'm gonna show you guys another one just quickly. It's more advanced. That takes into consideration time and price. So those two like go hand in hand. But all right, let me see. Let's see. Window. Okay, cool. All right, so let's go find a trade right now. And I'm pretty sure you can put this one on VR right here. Volume. So right here, you guys see this? You can put this indicator on the Pinex charts as well. So volume, profile, visible range. This is the one. So I'm on the 15-minute chart, right? And so the visible range just means whatever is on your chart, it will get the volume for like that time frame. So you guys have to, one determination you guys have to make is what kind of range you want to see. So what I like to do is, I'm going to do a 1 hour actually. What I like to do is I don't want to look at this. I don't want to look at the uptrend because prices are trading in this range right now. So I only want to look at this range. All right, this is a little small. All right, this is a little bit small, but you guys can change that on your own. I'm just going to go to 15 actually. So if you guys look at the 15-minute chart, right? Huge amounts of supply. You guys see that right here? Clearly on the chart, 28,000, right? Huge amount of supply right here. So once I see this, what do I want to do? Then I'm confident it's not going to break 28,000. So for example, I have some Bitcoin, right? I have some Bitcoin. Let me see if we're running orders. Nope. So I got some Bitcoin, right? And what do I see? 1 day, 28,000, you get 56% annualized yield. So because of what I saw from the VRVP, I'm not confident, but it gives me more confidence that it's not going to break this level, right? So I'll be comfortable doing a 28,000 gainkeeper. So let me put in my Bitcoin. And then boom. So that's how that's it. That's how I would see and how I would take a trade. This is better than trading blind, right? If you're just selling, 28,000 might be a good resistance level, but you're just kind of like guessing, right? Then it makes no difference. But from this, you guys can actually see the amount of volume traded at that price level, which is very important in making your trading decisions. All right. Back to the slides. Let's see. Okay, am I not sharing my screen? What am I sharing? Hold on. Hold on. All right. Now I am. We're back. All right, cool. Anyone have any questions about this one? Or you guys can ask till the end. Wait till the end to ask. Doesn't really matter. Okay, so I guess you can consider this the last one, but I have another one after this one, but it's kind of more advanced. So this one is a combination of two indicators. This is also one I used to love trading stocks, but this one works for crypto as well. So this is a TTM squeeze. It's a combination of a volatility indicator plus a momentum indicator. So what it is, it's basically a Bollinger Band, a BB band, inside of a Keltner channel. I think I'm pronouncing that right, Keltner channel. But I forgot who came up with it. But whoever did was a very smart. They basically, the BB band is a volatility. I think BB band is a volatility. Yeah, volatility indicator, because once it expands, so basically if prices expand, the Bollinger band will get wider, but the Keltner channel is momentum based. So once the BB band expand out of the Keltner channel, then that's when you'll get like a momentum signal. It'll make more sense when I show you the chart. So let me just go to the chart so it's easier to explain. So this is a TTM squeeze indicator. You guys can find this on TradingView as well. So basically, when it has red dots, that means it's waiting. That means volatility is squeezing, right? So red dots means low volatility. So this doesn't work as well. So I don't really look at the red dots too much. I do look at it, but because Bitcoin is very volatile, so once there's a move, everything just turns green, right? So green means high volatility. But what I usually look at is going from these small mountains, as I like to call them. It's basically like little small mountains, and then changing trend into, so basically red means bearish and blue means bullish. And I like to look at when it changes from red to blue. And if it goes from red dots to green dots, that's even better. So for example, in this case, volatility is compressed, as you can see by the little small mountains, right? And then volatility is really compressed, as you can see by the red dots, right? But then when the BB band, you guys can't really see it, it's what's behind this indicator. When the BB band expands out of the Keltner channel, it fires green, right? So that means, volatility is increasing. We're breaking out of the range. And I will use this in combination with other indicators. For example, but previously I talked about the 9 and 21 exponential moving average, right? So when the 9 crosses over the 21 and I see the TTM firing to the upside, then that's 2 confirmations right there. So I would get in when this turns green. So as you can see, you would probably get in very low, 17,000, and then capture this whole move up. Usually I would like to get out when it turns from like this light color to this dark color, which it just means the trend is slowing down and the momentum is slowing down. So I would probably hold until it turns into these dark green colors and get out, right? You guys can obviously use different indicators or strategies to determine your exits. This is just one I like to use. So for example, if you guys want to look at like a failed example right here, when prices are consolidating, it's a low volatility, low volatility, low volatility. I don't really like these, right? I don't like it when it's already like bullish or uptrendish, like these light blue bars, and it goes from red to blue, red to green. It just means that it's already bullish and it's just been inside of this too much, and there's no real momentum coming. I like it when it goes from red, so from bearish to bullish, and from low volatility to high volatility. So you guys can explore the chart. You put it. Oh, this is on the daily. I like to use this on the daily. I don't use it on any other time frame, by the way. So you guys can put this on your charts and check it out. Look through some different ones and kind of see what chart this one best fits with, because different indicators work with different tickers. You guys have to kind of look through the charts, put in the time to study, and kind of see which indicator has the best signals for whichever ticker. Of course, if you guys can also backtest it, which is more advanced. But with ChatGPT these days, they can basically code it for you. So that's a good thing. So here is the extra one. So this one I actually just started using. So I am learning it as well. So this is a time price opportunity. So this one in combination with a VRVP is like a god set of indicators, because the TPO is made up of time and price. The VRVP is made up of volume and price, right? So now you got volume, time, and price, which is what makes up the market. So this right here, these 2 indicators combined is amazing. So basically what the TPO is, it just looks at, okay, so it spent 30 minutes at this price, another 30 minutes at this price, and then it gathers up per session. So I'll show you guys a graph. It gathers up per session how much time was spent at each price level. So kind of like the volume, bars, but this one is the time spent at the price. So this one doesn't care about the volume. It's more like, okay, volume stayed at this price for a long time. So that represents, like the more time spent at a price level, it also means it's a strong level people are interested in. So for example, if price goes to, I'll just show you a chart. So it is easier to visualize. Let's see. Stream, present, share screen, share this whole screen right here. Cool. All right. So this is Trading Light. I think they have TPO on other platforms as well, but this is one I like to use. However, it is very laggy, as you can see. It's barely moving. Okay, so you guys see these little sessions right here in the gray boxes. This is the TPO. So what this just represents is how much time was spent at each of these price levels. It's similar to the VRVP, right? Let me close the VRVP. So it's similar to the VRVP, that it's just, these horizontal bars, and then the longest one represents, the most time was spent at this level. So I like to use this. The way I like to use this is also similar to the VRVP. I look at, let's say we're in a trading range right now. I look at what is the price level that people spent the most time at. So if you look at this chart, you can see the white lines represents the highest time spent at each price level. And most of these are concentrated at over here. Look at that, 28,000 corresponds with the most volume done, right, with the VRVP. So now that just gives me two level of reasoning, two confluence of indicators for me to place a trade. So now I'm feeling even better about the 28,000 covered call that I just sold on Pinex. So right here, you can see 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, around the 27,800 to 28,000 level. So I know for sure this price level is a strong in terms of volume and in terms of time. And yeah, if you guys have any questions about that one. So in conclusion, this one combined with the VRVP is what a lot of people look at. It's what a lot of professional traders look at. And this one actually has an interesting backstory. This indicator came about because people used to, back then when they didn't have charts, people used to draw on charts, right? So they obviously didn't want to draw every minute candles. So they would be, 30 minutes was spent at this level. So they would draw a block. And then the next 30 minutes, they would draw another block. So just keep on drawing these blocks when, back in the day when we didn't have charts. All right, let me stop sharing this screen. It's laggy, very, very laggy. All right. So in summary, let's do a quick takeaway. Any indicator is meant to be a guideline for having a system in place, okay? It's not meant to be a trading system all on its own. It's meant to give you assurance to confirm your decision or to just check your bias, right? So if you want to go long and the 9 is crossing under the 21, it's probably not a good idea, right? Just to have different layers of checks and balances in place for you to see if your trading idea is good. Of course, if you find a system like the 9 crossing over the 21, that's more of a system versus just a single indicator. And then you can back test it and see the results. Obviously, if it works, then go ahead and use that system, right? And the second one is price overall. The price, no matter what indicator you're looking at, the price trumps it, okay? If price is telling you this is a bad trade, this is a bad decision, no matter what the indicator is telling you, don't listen to it. So for example, prices are going up, but the RSI is like oversold, Well, okay, wait. That's a bad example. Prices are going down and the RSI is oversold. Don't buy it, right? Prices are still on the way down. Just because the RSI is under 30 doesn't mean it's gonna go up. So just examples like that. Price action plus the context, like I was talking about before, the context of the market is very important, plus the price. Indicators come second. And then the most important thing, if you guys remember one thing, remember this: the market is made up of three things: price, time, and volume. That's it. So all indicators are based off of that. All money is made off of those three things. So study those three things, get familiar with it, learn the little nuances that follow each one, and then you're on your way to becoming a better trader. All right. So that's it from my end. Hope you guys learned something about the indicators. If you guys have any questions, I can take them now. And did I forget to share my screen? I think I forgot to share my screen. I had three bullet points. It's fine. It's not a big deal. But yeah, I'm ready for questions. If you guys have any questions. And oh, by the way, guys, we just got futures trading on the global side. Super excited, super excited about that. Especially it's been on the mobile app for a little bit, but we have it on the desktop app now. It's so much more convenient. I like to use the desktop for trading. So go check that out. I think it's up to like 100x leverage. I mean, I don't recommend using 100x, but I mean, I love futures trading. It's better. You can short, you can long. You don't have to use those awkward leverage tokens anymore. So awesome product. Okay, apparently I'm long. I didn't even see. I'm long a trade. What indicator would you say is best for scalping? For scalping, what time frame are you looking at for scalping? Like 5 minute? I don't really scalp anymore. I'm more of like a position trader, but for scalping, I like to use the indicator wise. I use the combination. I use like 15 minute. I use the Fisher transformer along with the RSI and the slow stochastic, can't pronounce, the slow stochastic indicator. I didn't go over those, but that is what I use. But I also like to use, for example, let's go on the 5 minute chart right now. Let's see. I also like to use the 921 crossovers. Let me see if it's that. Yeah, on the 5 minute, but you have to be very careful. You have to like I said, like you can't just trade off of the signals. You have to like really understand the market context for scalping, right? So for example, over here, the 9 and 21 works better when the 9 works better as like resistance. So like, oh, we get this downtrend, we consolidate, we hit the 9 EMA, and then we come on down, right? So that's how I kind of use the 9 and 21 on the 5 minute. And then of course, if you look over here, let me close the volume profile. It's like a lot of chop, right? It's like, oh, up, down. The 9 and the 21 are literally just like intertwined. But then once it starts separating, you could get like a nice quick scalp trade up here. But for scalping, it's very tough on the crypto for crypto, at least on the indicator wise. I think I found more success position trading using volume and like very, very strong support and resistance zones. Oh shit. So hopefully that kind of answered your question. I also have like Yeah, it's a lot of tabs. I also have like different indicators, but yeah, let's see. People are interested in learning ways to use ChatGPT to test and improve strategies. Yeah, if you guys are interested in that, we can actually maybe next week I'll have on trade tactics on our platform to talk about that, because he's more experienced in using ChatGPT to improve the strategies as well as to optimize it. So we can have him on if he's free, and that will come back next week for that. I'm gonna ask him. I'm gonna ask him now if he's interested, and then tell him people are interested in that. Okay, cool. You guys have any more questions, comments, things you want me to go over? Yeah, ChatGPT. We're gonna host a session doing that for sure. So I don't know. We're gonna send out. We're gonna do the banner. We're gonna do. You guys can click on it. We'll send out some emails. I guess maybe we'll do some email blasting to you guys. What do you think, Sia?
Yes, we can definitely plan on that.
Mm-hmm.
Mm-hmm.
Very cool. Very cool. What is my trade right now? Am I long? Buy 7 orders. Market. Oh, it's 2670. Okay. Oh, that's a very little amount of Bitcoin. I don't even care about this. I'm just gonna close this. Create a new bot manual window. Yeah, I actually would like to close this as well. Actually, you can't you? Let me see. Wait. No, maybe not. I guess not. Everybody wants ChatGPT content. Everybody loves ChatGPT. Guys, ChatGPT is great, but it's great. Okay, we'll just say it's great.
Jay, Amir said, "Are you expecting more dump today?"
Yes. Well, actually, let me see. Let's look at the markets. Well, let's ask the indicator that we just had a lesson about, the ATR. Let's see the average true range. Let's see that one. So for the average true range, we were like 14 days. I'm gonna put in 30 days, get a better average. Okay, so the average true range. This is definitely not correct. It's definitely not 120. It's weird. Let's go to trading view. Hold on. All right, so the average true range inputs 62 long to 30-day. So it says we have around a $1,123 range, right? And today we already moved 1,374. I don't expect we're gonna continue down. I mean, I do expect we will continue down in the near future. So I'm expecting a pullback to at least 25,000. My best scenario that I hope for is a pullback to 22 and 20,000. That's where I think the bottom is. I think the bottom is already in for this cycle. But I think if we get a pullback to 22,000 to 20,000, that is where I would enter. That is where I would enter 100%. And I would hold that for the next 2-3 years. It's my HODL position. But in the recent term, we will probably continue down. We will continue down, actually. Let's just put it that way. But today, I think we're pretty much done. I think we might have a little bit chop, have a little move down, move up, but I don't think we're going to continue down much farther today. computer's so slow. Yeah, this trading light is very slow. All right, this is unusable right now. Do you guys have any more questions? Thank you guys, by the way, for coming today. We definitely want to educate people. Thank you guys for putting commitment to yourselves and learning different indicators to help along with your trading journey. We all want you guys to profit. We want you guys to make money, and no dumb trades, right? We don't want anyone taking dumb trades. So hopefully you guys learn something today, and this will give you kind of a basis, a more structured way for you guys to trade versus just randomly buying or DCAing sometimes. Yes, Kyle, Bitcoin will go to 1 million, 100%. Actually, no, I'm just kidding. I think Bitcoin is going to go to like 200,000, 100 to 200,000. I don't know about 1 million. That's a stretch. I know Kathy Wood thinks Bitcoin will go to 1 million, but I think it's a little bit of a stretch. That might be a little hard, honestly. All in, baby. Let's go. Yeah, but I would buy. Hey guys, if Bitcoin gets a dip to 20K, 22K, just buy it there. Hold it for the next 2-3 years. You can obviously short-term trade. You guys can even if you got extra money sitting around, this is what I would do. Use the buy the dip product. Let's see if we got any like 22,000 right now. We do returns. Let's see. Let me see how much. Here's my wallet on Pinex. Welcome to look at it. Okay, USDT 1,000. Tradable. Okay, cool. I can trade it. All right. I think 20K to 22K is going to be the bottom. Like if we get a retrace, that's it. 20K yields are too low. I would do like a 22K, right? I just got to just buy Bitcoin 22K. 20 to 22K. That is the best time, and just hold it for the next cycle. So I like this one. Actually, 9% is a little low. Let's see if they got anything else. 18-day, 12%, 22K. I would do that. 12% returns, 22K. Just basically a limit order, and if it doesn't get executed, you get free money. What is not to like about that? I love using the buy the dip structure products. This one, obviously, the one I just made, 28K. I don't think we're going to reach it today. Even if we do, it's okay. I made a calculated choice, returning me 56%, right, annually. Yeah, thank you. Thank you for joining and liking the content, Nico H. I love it when you guys are enjoying the content. You guys are learning something. Any plans on making DCA bots editable? Yes, we can. I think we are doing that right now. I think we are in the process of making them editable. Wow, my English sucks today. You can, okay, I guess you can't edit it, right? Yeah, I guess you can edit it after you start. I think it's hard to edit a DCA bot because because if you're in a position, you can probably only edit the bot once you're not in a trade. Because you're in a trade and you edit it, it's gonna like mess everything up. So I think it might be kind of hard to be able to edit the bot when it's already active, especially when you're in a trade. And then if you're not in a trade anymore, then maybe we can make that editable. I can talk to them about it, talk to the PMs about it, and see if that's something we can do. Mm-hmm. Is it better to buy this option or load up your Bitcoin grid buy at 22K? It depends. It depends on how risky you are. I would buy the option. because personally, I would buy the option. You get free yield if it doesn't get to 22K, and you get to buy Bitcoin at 22K, which is the goal, right? So that's what I would do. But there's a chance. I mean, yeah, that's what I would do, because if it doesn't reach 22K, you can't start a grid bot. So if it gets to 22K, you basically didn't make any yield. But instead, if you're in this option, you do a buy the dip order, you will get yield while waiting. But grid bots are good. So for example, if you're busy, right? If you're busy and you can't watch the markets, then I would start a grid bot at 22K. I wrote it in the newsletter. I didn't publish it yet, but basically what I would do is set a range of 22K. I mean, start at 22K, set an upper limit of 40K. I think 40K is around the top for this year, and then set a bottom for 15K. And then I'll just let the grid bot run if you're busy, right? If you're busy with work, you can't watch the markets, that's what I would do. Because it's going to consistently make arbitrage profits for you. But for me, I'm more risky. I like to get a bigger position in Bitcoin. I'm just going to use buy the dip and all in at 22K. Is there an onboarding how-to video? I don't know, Shia, is there? I think there is, but it's mostly like influencer videos that we have worked with, like influencer tutorials. I guess we have like specific tutorials on specific products, but we don't have like a all-encompassing like video introduction about Pinex. We have like specific product tutorials, and we have like a blog version of it, but we don't have a whole. Maybe we could do that. Maybe if that's something people want, we could definitely do that. Yeah, even the influencer videos are a little outdated because we are literally just like hunkering down and building new products for you guys, and we're releasing new products like every week. The product team is so fast. Like we just got futures on the desktop. We just got indicator bots, right? Like trade tactics. I love trade tactics bots. There's literally strategy trading now on Pinex, like copy trading. And then we also have indicators, different types of, algo indicators based off of DCA bots, right? That all came within 2023. All of that got released 2023. So we're releasing new stuff, and people don't even have time to make video about it. So yeah, maybe we could do that. Have a 0 to 100 tutorial.
Mm-hmm, definitely.
All right, cool. I think we should be good, unless you want to stay a little bit longer. I don't really care either way. I think we got all the questions though. It looks like Bitcoin wants to dump. It got rejected on the. I mean, it kind of just went over the 21, but then like it's coming down now because it's facing, it failed a couple of times. Let's see on the very short term what's going on. Low liquidity area, resistance. Yeah, it's just gonna feel like it's just very choppy right now. I don't think there is gonna be a big direction. Stock market just closed, red day, but we didn't. But we gapped up, so this type of pattern isn't too bad. I think we're just gonna chop for a couple of days, to be honest. But I think we will come to the downside for Bitcoin. Like Bitcoin today, right? We broke under the 9 EMA on the daily. So if we close under it, we should have a continuation down. I'm gonna look at the chart. Let me know if there's any questions. There's a couple questions actually. Nico H. Pause the bots. Okay, yeah, we could pause the bots so we don't have to recreate it. Let me write that down. That's actually not a bad idea. Let me write that down. option to pause ECA bots. Or option to edit it. Okay. Yeah, we love product suggestions. So you guys, if you guys have any suggestions, email them to me or Sia. Last question. Are any talks making a leaderboard? Yes. We are going to make a marketplace where we are in the process of making a marketplace for strategies and putting the leaderboard. Of course, leaderboard will be involved in that. So yeah, Chase, we will be making a leaderboard and displaying the top performing strategies for you guys to choose from. And Amir asked, would you buy at 25K support or wait for 22? I would personally wait for 22, 20. 25K, it could honestly, I could see us reaching 25K and not breaking under, but then that I would have to make a decision call when it gets there, because right now it's too early to determine if we're gonna hold 25K or we're gonna break 25K. But if we don't break under 24K, if we don't get under 24K, I would just buy at 25K, because by then it's just 25K is probably gonna hold. Futures and trading bots. Yeah, we can integrate that as well. It's not currently integrated. I don't know when that's happening. Right now we're focusing on different trading strategies and the ChatGPT/Pine script integration onto Pinex. So kind of more of algorithmic trading for everyone, right? You can connect your strategies that you make from TradingView onto our platform and automatically trade it. Super easy, super simple process. And let me actually share with you guys. So I shared with you guys the EMA crossover strategy, right? That one did pretty well. So this is the slow stochastic strategy. So basically, slow stochastic is like a RSI, but quicker, right? It returns the same. It goes from 0 to 100. Here, let me show you. So it's this line right here. This is a slow stochastic, right? So it goes from 0 to 100, and if it's under 30 and turning up, that's a buy signal. So right here it says long, that's a buy signal. But it's bad as a sell signal. So I don't have that turned on. So what I tested was basically the slow stochastic. Once it crosses over the 30, you would enter a buy position, but the sell position would be when the 9 EMA crosses under the 21 EMA. So this strategy actually didn't do as well, to be honest, as the 9 and 21. So for example, on this strategy, starting with $1,000, it only returned 2,331% from 2019 till now, while the EMA returned 4,000%. But just a different strategy I was looking at, just sharing with you guys. All right, cool. I think everyone is basically got their questions answered, and everyone's tired, and I'm tired. So I guess we can just end it there, all right? Yeah, thank you guys for coming. Really appreciate you guys spending the time to come and talk to and listen to me speak. Wish you guys have a happy whatever time you guys are in right now, morning, afternoon, night, and hope you enjoy the content. And give us a like or subscribe to the channel for updates. And don't forget to join next week. Hopefully, we're going to have a ChatGPT. We're going to have trade tactics on here to talk to you guys. So don't forget to subscribe and get your notifications on that. You don't want to miss out on that episode. Thank you, Valentine. Thank you, Jose. Hopefully pronouncing it right. Thank you, guys.
Thank you, guys.